Okay. Hi, how are you doing? Okay. See you.
Welcome everybody to Crypto Defined for August 11th, 2022. My name is Kathy Chu. I'm your host for this weekly interview series where we look at the innovators, the disruptors, and the skeptics of the $1 trillion crypto industry. Crypto Defined is produced by TruthDAO, a news organization within a DAO that is committed to unbiased, nonpartisan journalism. Please visit truthdao.xyz and join our communities on Discord and Telegram. Today's guest is Wilfred Daye. Hi, Wilfred. The CEO of Securitize Capital, an asset management platform that gives institutional and accredited investors access to cryptocurrency and other alternative assets. Securitize is part of Securitize Inc., whose mission is to allow digital asset securities to be issued and traded. Wilfred has more than 20 years of experience in traditional financial markets and digital asset management. He was previously CEO of crypto broker Enigma Securities and head of financial markets for OKCoin. He's also been a structured credit quantitative analyst and trader at UBS, Barclays, and Deutsche Bank, and began his career in structured products at Lehman Brothers. Under Wilfred, Securitize Capital has partnered with S&P Dow Jones Indices to offer tokenized funds tracking S&P indices. Securitize also has yield-bearing Bitcoin and USD coin funds, among all other alternative asset funds. Thank you, Wilfred. Thank you for bearing with a long introduction, and thank you for being here with us today.
Thank you for having me here.
I think you have a disclaimer you would like to give, correct?
Yes. My compliance officer requires me to read the disclaimer to you, but I'll make it short. The following does not constitute investment advice and is not an offer to sell or solicit any securities and offering securities. Discussions for information only. That's it. I think that's a short version of it. Thank you very much.
Okay, fantastic, Wilfred. Well, you have a depth of experience, and the reason why I was excited to have you on the show is you have experience in traditional financial markets and a lot of experience in the cryptocurrency markets, which I think is very important to understanding what is going on today. So before we get into the market environment, Wilfred, I wanted to talk to you first about what Securitize does, in case anyone in the audience doesn't know what Securitize does, so that they understand where you're coming from. Securitize, as far as I understand, allows assets to be tokenized that private businesses have a way to raise capital without going through an IPO. Is that right?
Yeah, so let me go back a little bit. Securitize Inc. come about in 2017. So we initially started in the sort of the craze of 2017 ICO world, and we lend our technology to T0 of the world back then. T0 is really the tokenization platform, in the exchange, and gradually we went have a service layer, got our loan licenses. So we have a broker dealer ETS license, allows us for primary market as well as secondary market trading of securities tokens. tokens. So those are the tokenized products on a particular blockchain protocol, for instance. We also have a transfer agent business, which is actually quite mature. We're the 10th largest transfer agent in the country. Aspiration is really to tokenize the process of capital management and voting and so on and so forth on chain. So this allows for much faster and better operational capabilities for so revolutionize, if you will, revolutionize the transfer agent business. So on the securitized markets side, we have a Reg CF. So Reg CF is under the Jobs Act, and that allows for private markets or markets in general, issue their or fundraise through something called fundraising or a fundraising platform, if you will. And this is under the Jobs Act, so there's exemption from SEC's perspective. So we are highly regulated. We're regulated under the sort of a SEC and FINRA type of framework at this point. So we do allow for crowdfunding on our platform. We also offer Reg D. Those are accredited investors type of products. This is again tokenized on our platform.
Okay. Now, can anything be tokenized? I've read on Securitize's platform about that equity, debt, fine art, copyright. Is anything and everything fair game these days to be tokenized?
Yeah, tokenization from operations perspective is a sort of it is a technology offering where facilitate ease of settlement, for instance. So in theory, anything can be tokenized. For instance, in today's world, if you sell Apple shares through your Charles Schwab account, you had to wait for 2 days for settlement. Part of it is because of a transfer agent. They have to adjust the cap table shares, to record the shares. Part of the reason is because that you have to go to the banks and get funding or move money around. So all those process takes some time. Imagine putting this settlement process on chain. So you actually have fidelity due to the fact that the blockchain is immutable, and also due to the fact that it is on chain, you can process atomic swap, allows them for instantaneous settlement. So they're definitely very interesting features, technology features related to tokenization of securities, and from that perspective, it's sort of agnostic if it's a bond or fixed or equity or commodities. So I think in theory, everyone any of the products can be tokenized.
So and as you mentioned, the tokenization of any asset allows for investment by people who might not normally invest in these assets. Is that correct?
From again, we're highly regulated from a regulatory perspective. Tokenization by itself does not change the nature of the security, meaning that if the security is Reg D exemption or security is Reg CF exemption, it does not change the nature of the legal or structural component of it, but does improve the settlement or operational component of the security settlement, so post-trade settlement.
So does it open it up to more investors, though, I guess is what I'm asking. Does it make it easier for institutional or accredited investors to kind of take a look at these assets?
Correct. Yeah. So there are other benefits of, for instance, if someone wants to, swap. Let's say that you have someone who's a crypto native wants to convert their BTC or trade their BTC into an Apple stock. That's doable through the atomic swap. If assuming that we have Apple shares on chain, for instance, right? So there are definitely other benefits. The market is really nascent at this point, partly because of a regulation. So we just got our broker dealer ATS license last year. We have 8 assets trade on our ATS at this point, and a heap of primary market issuance in our pipeline. So it is a nascent market, but it is a market that we tackle on 150 trillion market, right? So this is unlike cryptocurrency where we have 1.2 trillion at this point. We're tackling sort of a traditional securities world.
Right. Right. And I read that Securitize's platform has been used to launch the first fully tokenized VC funds, Spice VC and Blockchain Capital, and also the first security token issued as a debt by an NBA player, I guess Spencer Dinwiddie of the Brooklyn Nets.
Yeah, a few years ago.
How does that work?
I think the best, the world expert in this area in tokenization of a primary market is Jamie Fing is our president. I'm more focusing on the asset management side. So we have, like I mentioned, we have the securitized transfer business. We have the securitized markets as a broker dealer ETS business. ETS is an alternative trading system. Alternative trading system is really an exchange or dark pool, if you will. There are about 60 out there in a country. So our ETS allow for security token trading, and so I run an asset management business, which is securitized capital. So I think all those questions related to the primary market issuance and ETS. I think Jamie. You should invite Jamie over. He's definitely one of the world experts in security token.
Okay, fair enough. I had to ask. I just thought that was very interesting. Okay, so let's turn to investment in the crypto world, if you don't mind, Wilfred. We've heard about how institutional investment in the crypto industry is seen as kind of a gauge of market sentiment, and where institutional investors go, maybe retail investors will follow. So we've also heard about how institutional investment in general can possibly fix some of the industry's problems, such as wash trading, which some of our guests have come on and talked about. So I wanted to talk to you, not necessarily right now about Securitize and its funds, but just about institutional investment in the crypto world. Where are we, do you think, in terms of institutional investment in the crypto world? And what type of challenges do you see still in getting institutions to invest in crypto? And of course, that relates to securitized capital as well, but right. It's a broader industry question.
Yeah, this is a very good question. It's actually fairly broad. Going back, I started full time in cryptocurrency business industry in 2017. Back in 2017, the first question people ask me is related to KYC, MNL, and so on. So there are a lot of stigmas in the market. People are really worried about the potential money laundering risk associated with the crypto business. Now, going back to your question specifically, the crypto industry is actually pretty unique in a sense that it is actually a retail-driven business. So it is a business from an exchange perspective. You see, OKEX, where I used to be working at, Binance as well as Huobi. Those are more tilted towards the retail customers, and that unlike a credit derivatives market, of the 2000s, where credit derivatives is actually a more institutional product. It originated from the institutional side of things, right? Crypto has actually come out of a retail world, and then gradually over last let's call that 5 years start to become a more institutionalized or financial. There's a financialization through ETN products. A good example is Grayscale. There's also a number of funds coming along, right? We are pretty early in the institutionalization phase of a cryptocurrency. So we just solve a lot. We just solve some of the difficult issues regarding how do we manage keys, so custody issues, right? So one of the unique things about cryptocurrency versus the fiat, you can put the money in a bank. The fiat itself is a legal tender, and you can get FDIC insurance on your fiat, right? This is USD. In cryptocurrency world, cryptocurrency are not legal tender. So there's no FDIC insurance in US. And so the custody problem becomes more significant, more important. So we have in 2017, we had Zappo. This is one of the companies that were acquired by Coinbase a couple of years ago. But there were only one really institutional quality custodian called Zappo. Now we have a number of them. So we have Anchorage, which is one of the best ones out there. There's Coinbase Custody, which was Zappo. There's a Big Gold and a number of other custody providers out there. So I think that we actually begin to solve the custody issues at this point. Once the custody issue is solved, so the safekeeping of assets is very important for financial institutions, right? Because there's fiduciary responsibility, there are legal and regulatory component of it were reasons that we have to keep customers' assets safe, and that's very very important. So that's been solved. And it's also fairly recently, so I think last year. And at the same time, what we're seeing is we have execution engines such as Talos, used to be Tagami as well. Tagami was acquired by Coinbase a couple of years ago. So you have institutional quality execution engines coming along as well that helps institutions like BlackRock, for instance, is a good example. That's a recent example, to get into the cryptocurrency. In my view, over last, let's call that 4 or 5 years, we see tremendous growth in terms of building the pick and shovels of the cryptocurrency ecosystem, and now we're just beginning to see financialization and more significant institutions getting into the cryptocurrency, right?
Right. And what type of interest are you seeing at Securitized Capital among the funds that you offer, among institutional investors as well as just accredited investors for your type of assets?
Yeah, so in general, it's more high net worth individuals, especially for some of our accredited investors funds. So those are the folks who are maybe 10 million and above in net worth, and that's one bucket. And also a second bucket is more of a crypto native folks who wants to manage their treasury, and that's being because we offer a regulated product. And so some of the folks who let's say for instance they're public traded companies out there, and they wanted to tap into a regulated entity to help them to manage treasury, and so we're there for them. So that's those two areas we see a significant growth. And obviously, what we try to do as well is really educate some of the broader audience, right? So at this point, we still see a lot of sort of misconceptions, or there's a lot of headline risks out there. Some of them are negative, right? So basically the hacking, all this thing you see out there, the sort of the DeFi mess in social cybersecurity risk and so on. So we do a lot more education. So hopefully that a lot more folks will come in and be comfortable with the cryptocurrency assets.
Yeah, BlackRock was interesting because I think it was just this week or last week, right, where they launched the private trust offering U.S.-based institutional clients exposure to spot Bitcoin for the first time. Now, what I wanted to ask you that other guests have brought up is, as you mentioned, the institutional investment in the crypto area is still very nascent, right? And it's growing quickly because of infrastructure. Certain things such as the custody issue have been solved more. What do you think about what previous guests have said, that as more institutional investment flows in, it will help solve some of the problems in the industry, such as wash trading, because there's more volume, there's more scrutiny, there's more, I guess, fiduciary management issues. So do you think that issues such as wash trading will lessen and are lessening as institutional interest flows in?
Yeah, so my thoughts are a little bit slightly different. I think the in relation to the wash trading is more about exchanges, how we regulate exchanges. In the cryptocurrency world, we do not have something called surveillance sharing program, as in the equity world or stock trading world, right? Traditional world, and then in fact the cryptocurrency exchanges are not really exchanges by legal definition. They're more of a peer-to-peer trading network, if you will, right? So they are governed under the MTL or money transmitter license, or governed under the money services business. So they're not really regulated, from CFTC nor SEC's perspective. So those folks actually have very rigorous tests and sort of a surveillance monitoring program. Make sure there are no wash trading. Make sure that liquidity is not toxic in the exchange order book. So it's definitely there are lobby groups, traditional folks who wants to have a better